Hey everybody, welcome back to the channel. This is the week 3 of trading watch list that I provide you every single week on the upcoming trades that I'm buying or I'm watching for next week. Now next week is going to be very interesting because we started the bank earnings on last Friday with a bang, with JP Morgan beating all the earnings. We will go over that detail in a little bit. The upcoming week is going to be a firework because there are banks as well as the tech starts the earning for Q3. And with this excitement comes an opportunity to do some trading as well. So if you like this video, make sure you give it a like, share it with your friends, and without further ado, let's dive in. Kicking it off with the last week's recap on how stocks performed. Overall, as you can see, it was mostly green across the board, with Amazon over 4.7%, Nvidia making another 7% gain, Broadcom making another 4.49% gain. But what really sticks out to me is not the tech, it's the finance sector, where JP Morgan kicked off its earning with over 4% in the week, and then Bank of America and Wells Fargo staying around the 2% mark as well. Next week, the main focus is going to be on the earnings. However, on July 18th, we will get the retail sales month over month report. The forecast is about 0.5%. Last report was 0.3%. Now, this report is important because this report provides you an aggregated view of all the sales of retail goods and services over a period of a month. And these generally include your motor vehicle and parts dealership. It includes your food and beverage stores, general merchandise, food services, and so on and so forth, including gasoline station. As I mentioned earlier, I really liked how JP Morgan beats its earnings. And next week, there are going to be more banks and financial institutions reporting earnings. We kick off Tuesday with Bank of America, Charles Schwab, Morgan Stanley, PNC, BNY Mellon, Synchrony, and Mercantile. Then after close, we will have Interactive Broker. And then on Wednesday before earnings, we will have Goldman Sachs, US Bancorp, Ally Bank, M&T Bank, and a couple other. After the Wednesday close, we will have some major earnings. Tech kicks off the earning with Tesla and Netflix reporting earnings. We will also have IBM there. Discover is another one. Then on Thursday, Semiconductor comes in with TSMC reporting earnings, Johnson & Johnson reporting earnings before open. And then after close, you have another bank, Capital One, reporting earnings, and then more smaller banks on Thursday as well. And then on Friday, the big one, American Express reporting earnings, along with a couple other regional banks like Comerica and Huntington as well. So as you can see from next week's earnings report, it's going to be very heavy on the financial sector. And what we really want to see is how financial sectors performs, because this might be the turning point where the big money, which is mostly in tech right now, may cycle out and go into the banking sector. Next week will tell us based on the performance. We closed 3 trades on July 14th. These are the 2 trades that expired worthless with 100% profit. We had AMD at July 14th at $109 put. We also sold Bank of America for July 14th at $28 put. The other one that we closed with 98% profit was Square. Kicking it off with a quick recap on JP Morgan's earnings. They reported earnings on Friday 7/14. The EPS was $4.75. They almost beat it by $1 with exactly 0.99. Their revenue came out to be about $41.3 billion, and this was a surprise by over $2.47 billion. So that was an amazing result from JP Morgan and Chase. And going over their earnings history from past couple quarters, you can see they have a very good track record for predicting their earnings. Most of the times that's always a beat with couple misses here and there. The first stock that I'm going to be trading next week is the Bank of America stock. Currently, the Bank of America stock is trading at $29.11. It was down on Friday. However, they were still up for the week. They are going to be reporting earnings on Tuesday before market opens. They are expected to have an EPS about 84 cents. Last quarter, they had an EPS of 0.94, which means that if they come around the similar 94 cents, it could be a beat as well. The revenue estimate is about 24.9 billion. Last time they reported an earnings of about 26 billion. So if they come around the similar level, you will have another beat Now, Bank of America is one of the most traded stocks out there, especially in the options world. And looking at their earnings history, they also have a pretty good track record of estimating their earnings. They have had couple misses here and there, but most of the times they do give a beat. The goal is to open the options on Monday between 2 and 4 p.m. because that will give me a good time to assess the stock. Currently, Bank of America has a very good support level around the $28 mark, which is right around here. As you can see, the stock keeps bouncing from the $28 level, and even though the stock has not been able to breach the 30.59, it continues to edge higher from $28. The stock hit its all-time low for the year at 26.11 around the March time frame. The lowest of March takes you all the way back to the December of 2020, and since then Bank of America has had a very good run and is now consolidating in this range of $28 to $32. Those ranges in place, I do think Bank of America has a very good chance of beating the revenue as JP Morgan just beat. Also, because the Bank of America is estimating a lesser revenue compared to the previous quarter, there's a high likelihood that Bank of America will beat the earning. Trade will be the $28 strike price for 28th July. The implied volatility right now is about 33%. We have about 2,000 plus open interest here with a delta of 25. So most likely this is going to expire worthless. And the idea is if Bank of America beats the earning, we will have a major IV crush on Wednesday and Thursday moving forward. And that is where there are two ways you can play the trade. You can either close that options depending upon how much money you have already gained in that options premium, or you can keep the options premium open and most likely that option premium is going to expire worthless. The premium is a little bit lower on the 21st. You are going to get about $19 for an investment of $2,800, which gets you about 0.67% for the week. However, if you go to 28th, this gives you about $30. The second scenario could be that Bank of America misses the earning, and most likely if that's going to happen, if you look at the last earnings, Bank of America was trading around the 29, 28. When they beat the earnings, the stock ran all the way up to $30. So that's about $1. Previous earning, Bank was trading around the 34.16, ran up to 34.71. So that's another 60 cents to $1. That's the range. And if you keep going back, you will keep seeing that it's about $1 to $2 max range that generally Bank of America operates. So if Bank of America misses the earnings, at least between $1 to $2, that will take from 30 will maybe at $28, maybe $27. And we are still hedging our bet because with a $30 premium at a $2,800 investment, your cost basis will be $2,770. And I don't mind owning Bank of America at those levels because first, it gives a dividend. Second, it's one of the most liquid stocks that is traded on a weekly basis. So I will be able to use that in a wheel strategy as well. So that is the first trade for this week. So let me know in the comments what are your thoughts about this particular trade. Now, the second trade idea for the upcoming week is going to be Tesla. Now, year to date, Tesla has had a massive bull run. You saw it's 160%. Tesla has run up. Seems like the Tesla stock prices is stabilizing around this range of about $260 to $280. A day before Tesla finally enters in the electric truck battle by launching their first Cybertruck from the production line in Texas Gigafactory. So this is going to be a direct competition to Ford F-150, which is going to be very, very exciting. Upcoming quarter's earning is predicted the EPS will be about 0.82 and the revenue will be about $24.6 billion. So if you notice, both Tesla and Bank of America have a very similar revenue coming in. The previous quarter, their EPS was about 0.85, which was in line, and their revenue was 23.33. So this is going to be the real key over here. We could see a major dip if Tesla misses, because generally what ends up happening is stocks like Tesla, folks are buying the rumor and selling the news, especially from the institutional investors. Similar to Bank of America, we do see couple misses here and there, and especially in the recent years, Tesla has really improved its reporting. Since 2021, they haven't missed a single EPS, and this was in line. However, there has been a couple of revenue shortfalls, especially in the last September of 2022 when they missed the earnings, and that kind of led to a massive downflow over here and got a couple of sell ratings as well on these. However, for a long term, Tesla is going to be a massive stock in your portfolio. Looking at the Tesla chart is a little bit different from Bank of America. Bank of America stock was a little bit range bound. The Tesla is making a new higher high. So most likely if the earning is a beat, we could see newer highs for Tesla. I would not be surprised if Tesla actually breaks the $300 mark with the earnings beat. However, if the earnings is a miss, where could we see Tesla going down? Currently, Tesla is is a little overbought. RSI is trading around 68.72. The stock is in a massive bull run also because they are above their 20-day moving average. They're above their 50-day moving average. They're above their exponential 30-day moving average. Unlike Bank of America, where if they have a miss in the earnings or they're beat in the earnings, the stock moves about $1 to $2. That is not the case with Tesla. You can see in the last earning, Tesla was trading around the 170 mark, $78. After the earnings was reported, you had this massive drop from 178 to all the way to 166. So that's about a $12-13 drop. The earnings previous, when they were trading around 145, with the earnings, the stock jumped all the way to 106. That's another $14. And the earnings prior, the stock was trading on the 229 and the stock dipped around the 221. So that's another $15 to $20. And going back one more earning, the stock was around the 246, and after beating the earnings, the stock jumped about 272. So that's another 25. So seems like the stock could move anywhere between $10 to $25, $30 on the earnings miss or on the earnings beat. Right now, the stock is at $281. So the idea over here is very similar to Bank of America. I'm going to be opening a cash secured put in both of them. And in this case, I'm going to be a little bit more conservative and I will try to target the $267.50, 267.5 for July 21st. 267, I'm around the 20-day moving average, simple moving average, and my premium at that point will be about $495. So that is looking to be about 1.85% gain in a week. And the idea is if Tesla misses the earnings and the stock falls about $20, that will take from 285 to about 265. My cost basis based on this trade will be about 262. So that's the risk that I'm taking. However, if the trade goes in my direction where Tesla beats the earning, and we will have a major IV crush and we will be able to probably get this expiration worthless. So hopefully you enjoyed the week 3 of the trading watch list. I will post the trades on Twitter once I take it and the results. So make sure you subscribe to the channel as well as follow me on Twitter, InvestKaye, and I will see you next week, investor family. But don't forget to invest for tomorrow.